Hey everyone, welcome back to another episode of the Flip Genius podcast. Super excited today to have my friend Ari Page on. Ari is the CEO of Fund and Grow. He's been running that company for over 20 years and excited to talk to him today and find out more about what he has going on with Fund and Grow. So Ari, welcome.
Thank you for having me, Brandon.
Yeah, absolutely excited to talk to you. So before we get into the nuts and bolts of Fund and Grow and what you're doing now, I'd love for you to kind of give us a background of how you got into this business, how you got into the real estate side or the funding side. What were you doing before you got into this business?
So before I got into doing loans, I was actually working as a government contractor in the
Hmm.
Navy shipyards. So a
Okay.
completely different industry. And
Yeah.
I had a mentor at the time, or a gentleman who became my mentor, who I had met actually many years earlier when I worked at a moving company, and we moved him into his house, and then we ended up talking and making a connection, and so we stayed in contact over the years because I was always very nerdy and on computers. So he would like
Mhm.
send me different things that he wanted done on a like audio files that needed converted or pictures that needed edited. And so anyway, many years later, he was like, Ari, you should really quit working at the shipyard and come work with me doing mortgage loans. So eventually, I listened to him and I started doing loans with him. And but the timing of it was absolutely horrible. So that was around 2006, 2007, and we started noticing with the company that we were using for mortgages that the loan to value amount started dropping in the like the middle of 2007, as we approached 2008, the great crash. And
Yeah.
so the loan to value amounts were dropping. What once could be funded at 80%, then was at 75%, then was at 70%. And so we needed to come up with stopgap money to help these clients to be able to close on these loans.
Hmm.
And we were doing a lot of commercial and working with business owners at the time. And so what we found was by using business credit cards, we were able to make up hundreds of thousands of dollars of difference in helping them with their down payment money. And then as the markets crashed in 2008, we were like, wait, the real gold is funding businesses directly with these business credit cards that effectively can be used like a line of credit. And
Hmm.
so we were helping people at first with the mortgages. Then eventually we just kind of retooled, and the affiliates that had been sending us mortgage loan clients started sending us clients that just for business credit cards instead for business credit.
Hmm.
And so we started doing that, and that's kind of how Fund and Grow was born. Back then, we had created the name Credit Card Builders,
Hmm.
but since then, we've come
Okay.
up with a much better name of Fund and Grow.
Yeah. So you mentioned when the LTV, loan to value, started going down. So basically, what you're seeing is that in order for banks and mortgage companies or whoever to do loans on the houses, they were requiring borrowers to bring more money to the table, right? So if a house was $300,000, you previously they would loan up to 80% of that. The borrower would have to bring 20%. But as the market tightened, they started wanting to lessen their risk, and therefore they were requiring 25% or 30% to be put down from the borrowers. Is that what happened?
Exactly. Yep, you explained it
Okay.
perfectly.
Okay. And so people who were wanting to borrow money to buy houses, then they couldn't come up with the 25, 30, 35%, whatever was required by the bank. And that's what gave you guys the idea of, hey, how can we help fund the down payment portion of this for the borrowers? Is that right?
Yes. And it's since
Got it.
expanded into just helping out businesses in general. We do specialize in helping real estate companies because we show them how you can use a business credit card to directly fund an escrow account. In other words,
Okay.
turning a card into a line of credit. And the cards are just so much easier to get approved for than a mortgage loan. They're so much less expensive than private money or hard money. So it really became something that the business owner wanted to use across the board, not just for their
Hmm.
commercial property purchase.
Yeah, that makes sense. So you guys recognized that during that '07, '08, '09 timeframe, you kind of pivoted the business a little bit and then eventually said, hey, the real gold, as you said, is in doing business credit for businesses as opposed to mortgage loans. So I guess at some point you got out of the mortgage business completely and focused all of your attention on the fund
Yeah.
and growth side.
Yeah, in the 2008 timeframe, as you know, the real estate market kind of came grinding to a halt. There
Yeah.
wasn't much loans being put out at that time, and so we at the time we had about 3 team members, and
Hmm.
so we retooled what we were doing and just started selling the business credit cards as a package. Because we had
Okay.
first started doing it like hourly. We were charging $1,500 an hour, and it would take anywhere from 10 to 15 to 20 hours per client to put them through this. But then the affiliates that were sending us these leads, these clients that needed funding, kind of forced us. They were like, listen, if you guys want us to send you clients, you have to create a package. You can't just endlessly charge $1,500 an hour, which was pretty great. But so we so we came up with a package, and that's kind of how Fund and Grow was born.
Okay. So you were helping businesses get credit cards. Explain what that process is like, kind of the front end of the process. So if I'm a company, and a lot of our listeners are real estate investors or just getting into real estate investing, and one of the major problems, the first things that we talk about is if they're using hard money or private, not usually not private money to start. It's usually some type of hard money they're having to come up with 10, 15, 20% of the down payment. They don't have that. And so if I come to you and I say, hey, Ari, I have a company, I want to start flipping houses. What's the front end of that process? And then we'll get into the nuts and bolts of how it works.
So the main driver of business credit cards is the owner of the company having good personal credit. Now the credit
Okay.
cards don't appear on their credit report. They report to the tax ID or the EIN number of the business
Hmm.
itself, but they need to have some point of reference. So they look at the owner's personal credit, then they grant the cards, and then those report to the business itself. Now, having good personal credit is really that main initial driver. But once you're
Okay.
approved for the cards, they now report to Equifax Business, to Experian Business, and as well as Dun& Bradstreet, which will build you a Paydex
Hmm.
score. And at that point, you're now building actual business and corporate credit, which will lead to a variety of different types of institutional loans. For example, I've bought a variety of commercial buildings using nothing more than corporate credit, where I didn't have to personally sign. They weren't looking at my personal credit. It started, though, with me using business credit cards, building that score, building those reports, creating those exposures so that the lenders then had an ability to measure my success on those business bureaus. And then once that was accomplished, then I could use the revenue that my company was making and then get approved for actual corporate mortgages. So the first thing that we're looking at is, where is someone's credit score? If they have anywhere above a 700 score, they're going to be able to get business credit cards. They're going to be able to start building. They may even have a partner, like a wife or a husband or a business partner that they could work with, that they can add to our program to get more funding coming in. Then, if they don't have an entity set up, because a lot of people, as an investor, they might have been just solopreneur, just doing it under their own name. But we will help them get their entity
Hmm.
set up. Even new entities are able to access business credit cards because they're going off of household income. So they're going off of the income of the
Yeah.
entire household, as well as the fact that these are personally guaranteed cards. So they're looking at the personal credit, and then they're granting them.
Hmm.
So in many ways, it's kind of like a personal credit card. The only difference is that they don't report to your personal credit. And that has a couple key advantages, because a personal card, actually, the more you put on it, the lower it brings your scores. So if I have just as a quick example, a $20,000 card, and I put on more than 35% of that card, which would be $7,000. So if I put $7,000 on a credit card that has $20,000 limit, immediately my personal scores start coming down. Then it becomes harder to get access to mortgages, to other credit cards, to other lending products. Because when your score goes down, now you look like you're desperate and you're not doing well. But when you
Mhm.
use a business credit card, that same 35% ratio doesn't apply. In fact, the card doesn't show up on your report at all. So you can leverage the entire card without it pulling your scores down, making it very easy to go to the bank over and over again to get access to more funding.
Okay. So if I imagine there's a process through going from like a personal card to a business card, um, as far as so most of us have a personal credit card, right? So I have my personal bank accounts with my debit cards and my personal credit cards, but then I also have a couple of American Express cards. One of them's in personal name, one of them's in my business name. But I don't know that those were set up properly so that they're reporting to the agencies that you mentioned as business credit. So is it possible that even though my credit card has my business name on it, that it is still reporting to my personal because I haven't gone through a specific process to set that up? Or is that automatically being reported to those business credit agencies that you mentioned?
No, that's a really good question because a lot of times we have clients that get started with us and they tell us that they have certain business cards, and then we look at their credit report and those credit cards are showing up on their personal credit. And so
Mm-hmm.
if during the application process you don't fill it out properly, and because they don't require you to put all the information in there in terms of all of your business information, you could put just the name of the company essentially. And
Mm-hmm.
but now you're dealing with just a glorified personal credit card. So all the same ratios, the same utilization ratios apply, which could pull your scores down. And there's some
Mm-hmm.
lenders that even when you do fill it out, the application completely correctly, you use the EIN, you put it in there the correct way, you do all of your paperwork properly, you have all of your verifications done, they report it to your personal credit anyway. Like Capital One, like Discover, their
Mm-hmm.
business credit cards actually are just personal credit cards. Like you can give them all the extra information about your business, but they're just going to go ahead and report it to your personal credit anyway. And so we commonly see that. It's one of the things that we work our clients around.
Okay. So what you guys do at Fund and Grow is you look at, I fill out an application, send you all the information, and then you guys go in and look at what I currently have set up and then help me navigate that process so that I can start building business credit.
That's right. The only thing that the client needs to bring to us is two things. That is a good personal credit score and a
Mhm.
good attitude.
Okay. That's an important part of it. Good
Yes.
attitude.
So once
So
they
how
have a good
long?
personal credit score, then we can help them with the entity if they don't have one set up.
Mhm.
We're going to create the entire strategy and the plan. We are
Mhm.
then going to select which applications are the best ones for them, but we don't just fire them off. The first thing that we do is we go over that with the client. Like these are the first 4 or 5 accounts that we're going to go for in what we call the card stacking process. So once the
Mhm.
client has seen the credit cards that we're planning on applying for, they then either approve or decline each card before we move forward with the application process, which is a really important part because there's times where clients just don't want certain banks, or and from an FTC standpoint, it's very important the client reviews that ahead of time.
Mhm.
So then once they've approved each card, then we move forward and do the applications. Then after that, there's a simple verification process that we walk the client through to verify the cards with each lender. And that verification process is almost more like a negotiation process, which will end up bringing in much higher limits.
Mhm.
So, like, this is something that we go through all the time where when we first apply, 4 or 5 of the accounts may come in completely declined. But then, after going through the verification process, each card gets converted into some type of an approval. from our numbers, 86% of the time when we're applying, the card
Hmm.
ends up being approved. So
Okay.
a small percentage of the time, the cards are not approved, but we're going for a variety of different cards. We're giving the client relationships with a whole variety of institutions that they haven't had before. And for example, like
Hmm.
American Express, if you don't have any relationship with them, it's very likely that the first card you get from them, regardless of how good your credit is, regardless of how long your business has been in business, regardless of what your revenues are, they're only going to give you a $3,000 limit. But
Hmm.
then when you follow our recommendations and use that card correctly, which is essentially a utilization game, utilizing it the right way, paying it down, carrying a short balance for a couple months, then paying it off, then utilizing it again. We have a whole process that's set up. Then when we go for what we call your second round of card stacking, because our
Hmm.
process is putting you through 3 or 4 of these rounds of card stacking, then we're going to get a much higher limit when we take you back to American Express. This is the entire card stacking process. And many times we can go right back to the same bank that we applied you at, and we can get more cards from the same bank. Like Chase Bank, for example, they give you multiple cards. You don't just get one card from them, you can get multiple cards. And then, so let's say that you have a 0% card for 9 months. And so let's say the card was at $20,000. So 9 months in, or maybe about 8 months in, you're ready for another round of funding. You're probably going to be on your second or third round of funding by that point. And so we'll go right back to the same exact institution to Chase and apply for a different product. Now, let's say
Okay.
they only give us $10,000 because they just gave the client a 20,000. Usually they'll match it, but just for the sake of the conversation, let's say they only give them a $10,000 card. Now you might think, well, that 10,000 is not enough to move everything from the original card, from the $20,000 card, but that doesn't matter.
Hmm.
What we show the client how to do is how to merge these two cards together. So now instead of having one 20,000 and one 10,000, you now have one $30,000 account. And this is the only way to take that old 9 month at 0% card and
Hmm.
to convert it back to a 0% card is by merging it into a new application, a new card that you've been approved for that is at the 0% rate. So
Hmm.
once you've merged it, now you have a $30,000 account, and now you're down to only having one card again from that institution. And so you can go
And at
back there,
0%.
and it's at 0%. And so this is the card stacking process, and we do it with a variety of different banks, and each bank has a bit of a different strategy. And we just have a huge laundry list of cards that people aren't even aware of. Little
Hmm.
credit unions that offer business credit cards depending on your geographical footprint. And we just give people access to a lot more cards than what is generally known in the industry or in the marketplace. Like if you go to Google, you're going to get access to all the big banks. But what about
Yeah.
all the other banks that offer 0% cards? We want to turn this into a real tool where you can get a couple of $100,000, not just, tiny little $7,000 limits.
Yeah. So really what you guys are offering is a strategy. It's not just a, hey, we're going to help Brandon, we're going to help your business get a business credit card for with a $25,000 limit. It's more of a long-term plan or long-term strategy to help start wherever you are and build onto that. And you mentioned you're going to be coaching me along the way or teaching me along the way of, hey, don't do this, do this. 6 months from now, you're going to need to do this. You need to pay this down this amount. Don't pay it off completely, pay it down this amount, use it, all those different things. You're telling me how to do that. So it's not something I have to try to figure out on my own.
That's exactly right, including things like how do you use a credit card to fund an escrow account?
Hmm.
Because what if the title company doesn't accept credit card? Or they might
Right.
have a limit to their credit card transaction that they do. They might say, well, you can only put 5,000 or 10,000 in from a credit card. Well, there's other services that we teach our clients about that you can use to pay any vendor, any legitimate business using a credit card. Even if that business does not accept credit card, they will accept a check. They will accept an
Mm-hmm.
ACH or a wire. And so That's another part of what we do for our clients is walk them through that process and how they can effectively do that. And I'm not talking about what a lot of people have probably heard of called liquidating a credit card. Liquidating a credit card is an illegal operation to attempt to extract the money off of a credit card. And that goes against all card issuer rules. That goes against Visa card, MasterCard, American Express, Discover. And what you risk is having your credit cards shut down. What's really important is that when you are facilitating these types of transactions, like funding an escrow account, that you do it the right way, that you do it with a vendor that's been specifically approved by Visa and MasterCard, et cetera, to be able to run that transaction. They're allowed to run that transaction. And so, unfortunately, there's other companies out there that are telling their clients about like liquidating credit cards. And then the client ends up running into issues down the road when they use those services. And these are essentially like companies like a attorney firm that wants to make a little extra money on the side, so they'll make up an expense, let's say a $25,000 expense, and then use their merchant account to charge the client's credit card, and then charge them 10% of what they're charging. And we've seen that before, and it always ends badly. So it's really important to use the proper third party services, and there's a variety of them out there.
So when you're saying liquidating a credit card, that's like pulling all the cash off of the credit card.
Yes, and you don't need to pull the cash off the card. If a client is trying
Okay.
to make a legitimate purchase, then the question is, what business are you trying to make a purchase with?
Hmm.
Then what you need to do is not pull the cash off and use cash to pay them. You just need to facilitate a payment from the credit card directly to that business.
Okay. And you mentioned an escrow, paying escrow with a credit card. How do you do that? So I'm going to buy a house. Um, my lender is going to loan me 80%, let's say, and let's just use simple numbers. $100,000 house, lender's going to loan me $80,000. I've got to come up with 20 grand on my own. I don't have 20 grand in the bank. I'm going to use my business credit card to pay that $20,000. How does that work?
So, in the case of funding an escrow account, we direct our clients to a service called plastic. So,
Okay.
plastic is the word plastic, but with a Q at the end. So,
Hmm.
if we were French, we would call it plastique, but we're not,
Yes.
so we don't.
Oh.
So this service allows you to fund an escrow account directly with no limit. So you go into plastic, you set up an account, you can add a variety of cards, not just one. Let's say you want to pull 10,000 off one card, 5,000 off another, 5,000 off another to complete your $20,000. You then
Hmm.
select if you want to ACH it, if you want to wire it, or if you want to send a check overnight. And each one of those has a slightly different cost to them. The most expensive is the wire at 2.9%. And
Okay.
then they will wire the money directly off the card or ACH or send a check, and they'll send it to the escrow company, to the title. And the seller does not know the difference that you have just funded that escrow with a credit card. And the wonderful thing
Right.
is that these cards will give anywhere from 2 to 3 up to 5% cash back. So in the case that you do need to use one of those payment services, and let's face it, many times you don't. If you're rehabbing a house, you're just going to go to Home
Hmm.
Depot and buy materials. If you
Right.
are put using a plumbing contractor, you're just going to swipe the card with them. You don't need to use those third party services. But just in the case that you do, rest assured that
Hmm.
you're actually going to get 2%, 3%, 5% cash back just by making that transaction. So on $20,000, what is 3% that you're going to get back of that? It's a decent amount of money.
Six. Yeah. $600, I think. Quick math.
Yep. So it's at
Is
least
that
going to
right?
cover your transaction fee.
Hmm.
And many times businesses are spending $50, $100,000 a month just for normal business operations for different deals that they're doing. Why do
Yeah.
that with hard money or private money or mortgages when none of those types of loans ever pay you anything back.
Hmm.
They never send you a check. The only loan that will send you a check is a credit card. And I'm not suggesting here that someone goes out and makes up business expenses to try to get 2%, 3% cash back. I'm talking about the normal spending that our business would be doing. We would just be doing it out of our checking account.
Yeah.
Run it through a credit card instead.
Yeah, it's interesting. I was just thinking through that. So I have in the past gone to a hard money lender, borrowed one time $100,000, one time $75,000 at 12% interest in order to use in operations of my business, just to help with cash flow in between the slow times. And so I was paying 12% per year on that money, paying it monthly interest to run the business, and then eventually paid those back. But based on what you're telling me now, I could have been using business credit through these credit cards that you're talking about, paying potentially 0% interest to still have access to that capital to run my business.
Yep, with no closing and points and all of that.
Yeah, that's great. I had no idea. I didn't know that was possible,
Yep.
especially through credit cards. So one of the other things that you mentioned is you said that you have actually used business credit to buy multiple commercial buildings. Explain that to me, because I think I'm still kind of small thinking, small minded from the business credit standpoint. And like, okay, I see how I can get access to $25,000. If I need to pay a contractor, of course, if I'm going to Home Depot, like you said, I can just use the credit card to buy materials. But if I have to pay a contractor, I can use one of the third party processing companies that you mentioned if I need to do that, or if I need to use it for escrow. Well, how do you get to the point of, yeah, I'm getting $25,000 on my business credit to use, to the point where you're actually using that to buy a commercial building or multiple commercial buildings, I think you said.
Yes. So, good question. Now, we actually get clients anywhere from up to 250,000. I personally right now have over 800,000 in credit cards. And so you can actually get very large amounts of this. If you have a 700 plus score, then expect that you're going to get a couple $100,000 in business credit cards. However,
Really?
the corporate loans that I was talking about is different. So we use
Okay.
business credit cards to create an exposure on the business credit bureaus. This way, when you go and apply for a corporate loan, there's
Mm.
actually experience on those credit bureaus for the banks to look at. That now they can judge you and you'll have an actual paydex score on Dun and Bradstreet. So the
Okay.
corporate loans that I've used for various commercial buildings were not business credit cards. What they were
Hmm.
was they were actual corporate mortgages that had nothing to do with me personally. They were not personally guaranteed. And the only reason I was able to get them was because I had used business credit cards for a number of years before applying for those corporate loans. And
Got
so
it.
the business cards give you the robust business credit profile.
Hmm.
Then, once you have a robust credit profile on your business side, now there's other loans that are more lucrative that you can apply for. Now, the business credit cards are always a very important part of the capital stack, even when you're using corporate mortgages and other types of business lines of credit and business loans. So,
Hmm.
those are always tied to the asset or to the property itself. Whereas a
Hmm.
business credit card is unsecured, it's not secured on any property. You can use it for the rehab, you can use it for down payments, you can use it for a variety of things. You could use it for the down payment on a commercial mortgage that is, all based off of your corporate credit rating. So
Hmm.
so there's two different types of credit that Fund and Grow helps with. Well, actually a variety of different types, but for the point of this conversation of what we're talking about right now, the business credit cards and then the corporate credit loans. And so once someone's built up their business credit rating, then they and they have good revenues with their company, then they're able
Hmm.
to apply for other forms of loans that are considered corporate loans. And so
Hmm.
that's where those larger commercial purchases can come into play.
Okay. So the business credit cards are helping you build your credit through in your business name, so that once you have established credit, if you needed to go get a commercial loan, they can look and say, hey, this business has been in existence for a while. They have good credit history because they've used these business credit cards for years and they've paid them off on time and all that. So now we will be willing to give you a commercial loan without a personal guarantee. Is that what you said?
That's right. Yep. I did not personally
Non-secured?
sign. Yeah, it's still secured on the property,
Okay.
but it's
Just
just
not personally guaranteed.
not personally guaranteed. Yeah.
Okay. Yeah, that's great. Did not know that was possible.
Yeah, and there's another great aspect to using business credit cards. Let's imagine that you're rehabbing, you're flipping, and you are dealing with a variety of different contractors, whether it be an
Hmm.
electrical contractor, a plumbing contractor, a roofer. Sometimes we're just not sure of the how honorable all these companies are. We might be dealing with a contractor that we're just not sure about. The
Yeah.
safest thing to do if you're dealing with a contractor that you've never used before and that you're just unsure of is to put that purchase on a business credit card. Now, let me give an example. Let's say that you're putting a roof on a rehab for $20,000 and the roofing company comes out, they get the job, they're working on the job, but they're unable to get the roof to pass inspection, which happens. So the roof is red tagged, and what does the roofing company do? A lot of times they blame you. They're like, "Well, it's the
Yeah.
inspector's fault. You know, we did the job right." They don't care about your timetable. They don't care about the fact that you need to flip this house, that you need to get out, that you have money in this. You're paying for different loans that are costing you every single month. And so, in a normal circumstance where someone would have paid for that out of their business bank account, you're going to have to go to small claims court. You're going to have to argue
Mm.
back and forth with this roofing company. And
Yeah.
perhaps you're just going to have to go and pay another company to finish the job. But if you put that charge on a business credit card, all you have to do is turn over that card, call the phone number on the back, explain to the bank what's happening, and they will pull that $20,000 out of that roofing company's bank account and place it back on your credit card. It's called
Mm.
chargeback. So using credit cards as a form of asset protection for individual projects is something that we teach our clients about. Now, that doesn't mean that you necessarily get to keep that 20,000. What it means is that the bank is going to be in contact with the roofing company and they're going to say, "Listen, if you guys want that 20 grand, if you want to recharge the card, then you have to go and finish the job."
Mhm.
And so once the job has actually been completed and the roofing company can verify that with the bank, they then allow the transaction to go through. So the bank in this situation becomes your enforcer. Instead of you
Mhm.
having to argue with the roofing company or the electrical contractor or the plumbing contractor or whatever, let's say it was inventory and supplies. Instead of you having to argue with another company, you just initiate a chargeback. Now they're forced by the bank to make good on their promise. So using credit cards as a form of asset protection is something that's really huge and it can save you a lot of money. I've had to do it multiple times on different projects.
Mm. Is there a time limit on a chargeback? Like if I make a payment to a contractor a week later after the payment's already been made, can the bank still go pull that money back, or is there a time limit where they can't go pull it back any longer?
There is a time limit, but the time limit is very long. It's like 12 months.
Really?
Yeah.
So
So
6 months later, they could go back and pull the money back from that contractor if I needed to.
yeah, but in that instance, you're going to have to prove to the bank that there's a problem. They're going to ask,
Sure.
"Why are you waiting 6 months for this?"
Sure.
You
Yeah.
know. So, and if it makes sense, if it's something like, well, it's inventory and it was going to be delivered over a long period of time, over a 6 month period of time, and they haven't delivered in the last 3 months, then it would make sense. But if it's a roofing company, for example, then they're going to ask, well,
Right.
why didn't you, as soon as it happened, a month, a week later? Now you might be able to prove, well, listen, I was arguing with them. Look at all my back and forth emails. Here's screenshots
Hmm.
of the texts of me contacting them. And the bank is
Yeah.
going to do due diligence. They're going to attempt to contact that roofing company and ask them. They're going to contact them and say, "Hey, we have a client that is claiming that you didn't finish the job. And what do you have to say?" So the bank will do their due diligence, but this is a feature. The chargeback is a feature that can come in handy, really handy. I mean, I can like the times that I've used it were absolutely huge. Like I had done a $100,000 job of installing a camera system with a whole variety of things like facial recognition and automatic doors where it has the magnets that lock the doors. This is for the Fund and Grow building, and because
Hmm.
we take data serious, data security very, very, very serious for all of our clients, of course. And so that requires us to have robust oversight. And so we used a company that did a great job for us. They were recommended by the camera manufacturer themselves. And we installed a $100,000 system at the Fund and Grow building. So then later, when I was doing a job here at my house, and it was essentially installing fiber optic between the different buildings, because here in Florida we get
Hmm.
lots and lots of lightning. And so if you have Cat 5 cables running between the buildings, it's liable to that they're going to get shocked and zapped when there's lightning. And so we had to
Hmm.
switch all that over because I had many problems with equipment getting fried. We had to switch it all over to fiber optics. And with fiber optics, there's no copper connection. It's all, glass. And so I decided, why don't I just use that company that I used at the office building? They, did $100,000 job. They did a great job for us. And so I brought them over here, and the job that I had them do was only 35,000. And they
Okay.
got about 2/3 of the way through the job, and then their workers just stopped showing up. So of
Hmm.
course I started calling the owner of the company. I'm like, "What's going on? You guys did a great job for us before. This is almost unbelievable." And in the end, they never came back and finished the job. All $35,000 was returned to me,
Wow.
even though they had done part of the job.
Hmm.
Chase still reversed the entire transaction. It was actually a series of transactions I had paid over like a 2 or 3 month period of time as they were doing the installs. And they
Hmm.
reversed all the different transactions, and I got all the money back. And then I went with another contractor. So,
Wow.
and I also have other examples of it, but suffice it to say that it's very, very useful and needed.
Yeah. Yeah. I've never thought of the credit card as being an asset protection, but the way you just described it, I can see how it absolutely is.
Yeah.
Very beneficial. So you've got me thinking here. I'm thinking about me personally and what I do. I have no idea if I have business credit whatsoever. Like I said, I have a business credit card that I use, and in the past, spent 20, 40, $50,000 a month on that card. Um, but I don't know if that's going to my personal or to my business. I don't know if my business is building business credit, if it's being reported to those. So what do I do? How do I find out? Do I just look at my personal credit report? Do I fill out an application on Fund and Grow? What is the next step in the process for me personally, and beyond that, our listeners as well, who I'm assuming I've been doing, flipping houses for 20 years and I've never looked at building business credit and using business credit cards. So I'm assuming there's a lot more people who have not done 20 years worth of real estate who are in the same situation and like, wow, this is something new to me. I never thought about this. I want to learn more about it. What is that? What's the next step for me or for those listeners?
So the best way is to go through our pre-qualification system.
Okay.
So on our website, there's a pre-qualify now button at fundandgrow.com. There's a pre-qualify now button, and you click that. You fill out the basic information there, and we are going to take a soft pull, which means we won't leave an inquiry on your credit report. We're just going to take a
Mm-hmm.
look at your credit report, and we will determine how much funding you can get. So as soon as you fill out the pre-qualification, instantly you get back a response telling you how much funding you qualify for. And that is how
Mm-hmm.
much business credit you qualify for. So Fund and Grow will then be able to take a look at your credit and advise you off of your report on which ones are showing up on your credit report, which ones aren't. Now, even if they are showing up on your credit report, that doesn't mean that you're not necessarily going to be able to get access to business credit cards because having robust personal credit limits helps when it comes to getting approved for business credit cards. So if you have 25, 35, $50,000 personal cards, that means we'll be able to replicate that fairly easily on the business credit side.
Mm-hmm. Okay. So going to the website, fundandgrow.com, and filling out the application. That's the first step
Yeah, and specifically
or
the pre-qualification. So
Pre-qualification.
that way we can qualify you before you ever get started or engage our services. We already can tell what's going on, and if you know how fundable you are, and if you have a credit partner that you work with, such as a wife or a business partner, you can just click the secondary option and just add their info
Mhm.
in, and that will double the amount of funding coming in.
Okay. That makes sense. That's a streamlined process. I guess over 20 years, you guys have figured that out and streamlined it to make it as easy as possible for the user.
Yes, it's very simple. And then once a client does get started, everything is done through e-signatures. It's all done through a secure portal. We're not asking
Hmm.
people to fax us stuff and to, send it through snail mail. It's all done
Yeah.
very quickly and easily through our client portal, which really streamlines the process and makes it easy and quick for us to move forward to get credit for the client.
Okay. And I guess you guys, you mentioned you have packages. So is there different levels or different packages that pay, fund, and grow to help me establish this business credit based on how much I'm going to get, or is it just kind of a one size fits all package?
So we actually have three different ways that a client can engage with us. So we have
Okay.
one package that's for two partners. That way they
Mhm.
can kind of split the cost, and they will both be under one membership. Then we have another package that is just for a single business owner.
Mhm.
And that's a lesser cost. It's so these are
Mhm.
the two membership options. Then we have a third membership, which is a little bit different than the first two, and this one is the pay after funding membership,
Mhm.
meaning that once you engage our service, we are going to go forward and get you business credit cards. Then after we get you the cards, then we are going to send you a bill for the cards that we set up for you.
Mhm.
Now, the two memberships
Understood.
that I just mentioned, that what they do is they limit your cost. They bring the cost down. So if you pay for one
Mhm.
of the memberships, that's where you're going to get the 3 to 4 rounds of funding. If you do the
Mhm.
pay after funding membership, that's one intensive single round of funding. Then we send you a bill and you pay for that.
Okay. And I assume that option is a little more expensive because you're essentially financing all the work that you're doing on my behalf. So it's going to cost me a little bit more if I'm paying on the back end.
That's exactly right.
So the better option would be one of the first two if those options work for you.
Exactly. And that's
Okay.
most of our clients choose one of the two membership options because it's the cheapest in the entire industry in terms of what we're asking the client to pay and in relation to the amount of funding that we're getting. We've seen companies out there just charging huge amounts, 5,000, 10,000, charging clients on the back end after they get them the credit, another 10% of the credit that they
Hmm.
get them after charging them money up front. So Fund and Grow is definitely the least expensive in all the credit stacking options across the industry. We haven't found any that are cheaper than that, unless you're going to just go and try it on your own, which usually ends up in much smaller limits and people not thinking that it's a real tool that they can use because
Hmm.
it's a building process. And without using a team that's done this for 35,000 clients over a 20-year period of time, you end up kind of stumbling around and getting much smaller limits and then not knowing how to utilize the cards properly. How do I fund an escrow account? What are the utilization ratios in terms of being able to get better second round, third round, fourth round results? So
Yeah.
there's a lot that Fund and Grow brings to the table. When we run the numbers, we can see that we get clients 70% higher limits than what they get on their own.
Wow.
That's a big difference.
That's a big difference. And you mentioned too, so obviously that's one major benefit is that working with Fund and Grow, I can get, as a general rule, 70% more than I can do it if I did it on my own. The other thing that I think is a huge benefit, and I was going to ask this, but you hit on it, is you have 35,000 people who you've done this for successfully. That's a pretty good market study to say, hey, is this company doing what they say they're going to do? Are the customers happy? 35,000 satisfied customers that you guys have worked with.
Yes. And over the years, we've generated $2 billion We're going to hit
Wow.
2.1 billion shortly, but over $2 billion in credit card funding. So we're very proud of that.
Wow. Yeah, that's amazing. Well, man, this has been very eye-opening. I've got some homework on my end to do to go onto the website, fundandgrow.com. Any other way, in closing up here, any other way that people can find you or follow you guys, get involved with Fund and Grow? Obviously, going to the website like we talked about, but any other ways people can get in touch with you?
I mean, we're on all the social media channels. We have a very large following on Facebook. We have a YouTube channel where we put out content weekly. People could also call our office. I
Okay.
could give the number. That's 1-800-996-0270. And
Hmm.
there's funding advisors that will actually put you through a free business credit consultation. So they can help
Wow.
you with that pre-qualification process where it does a soft pull, looks at your credit, lets you know exactly what's possible. And if we can't help you, we're going to also tell you what you need to do in order to qualify in the future. So
Hmm.
there's always a path, even if that path isn't an immediate funding path, there is a path to being able to get funding, whether that is building your personal credit or doing credit repair to fix your credit. And we can advise you and point you in the right direction in that case as well.
I love it. Great. Ari, man, this has been fascinating. I've learned a lot. I know our listeners have learned a ton, and I'm sure that they will be going to the website and starting that pre-qualification process to see how they can get set up with business credit. So thank you again for joining today. It's been great information, and I look forward to talking to you again soon.
All right. Thank you, Brandon. Appreciate you having me on.
Take care, Ari.
All right. Take care.